Now for our slot, the Eye on the Economy. Sibusiso Gumbi, who's Macroeconomic Strategist at Standard Bank, joins us. Morning, Sibusiso. I think we're all a bit out of touch with where all the indicators that we get week after week. This week we've got three coming up, mining tomorrow, we've got the PMI and the retail on Wednesday. Just remind us where mining was at the end of last year. We've been talking about it on the show and I think we have a good idea. It wasn't a good time for mining. What are we expecting in these numbers, which are actually going back to November last year?
Yes, good morning. We do expect, after mining contracted in the third quarter of last year, we do anticipate a continuation of this contraction, however, at a lesser pace. November numbers, we anticipate a contraction of negative 3.9% year on year, after it contracted by about 7.7% in October of last year. And that, again, stems from the industrial action that has affected so many sectors across the mining industry. We do feel that those stoppages, those work stoppages, will trickle into 2013 numbers as well. Another point, if I can just touch briefly on from a technical standpoint, is the rebasing and reweighting of the mining production index. With the lessening of the weighting of the PGN, for example, as well as coal, that will probably see a lessening of an impact or a decline from these sectors in the overall headline number. However, this is likely to be countered given the increased weighting of the gold specific sector in the mining production index. So anticipate a continued contraction, but not at the same pace.
Well, we were saying earlier some encouraging numbers generally in the economy in the last couple of weeks. PMI, that's one of the important measures. What are you expecting there?
Yes, that's right. On Wednesday morning, we have PMI. We expect that to pip just very slightly over the 50-point benchmark expansion line. We expect a print of 50.2% for the month of December. And that's coming off the back of fairly generally improving manufacturing output metrics globally. You've seen that in economies such as the US and the UK, China, as well as other important emerging markets such as, of course, India, Brazil, as well as Russia. So from the domestic front as well, we saw a surprisingly upbeat number from the manufacturing sector. We saw manufacturing output rather increase by 3.4% year on year for the month of November. And that could also contribute to an upside surprise to the PMI number for December.
Okay, and then retail, in our conversation a moment ago, maybe a correction for retail, long overdue in the view of some analysts.
Well, that's correct. We do anticipate, again, fairly subdued trends in the retail sector as well. We've penciled in growth of about 1.3% year on year for the month of November from 1% the month prior. And again, that's on the back of how we feel as a little bit of a demand erosion that may be creeping in from the non-durable sector, which has been subject to quite disproportionately high inflation. So we do see a little bit of demand erosion that may be creeping in there. The consumer confidence number for the fourth quarter of last year was negative 3 points, and that's almost set the tone for quite a subdued year-on-year retail trend for the last quarter of last year. And just on maybe providing a floor to that, or a floor to the weakening, is probably the quite upbeat movements in the consumer credit extension, which has seen non-mortgage growth continue to grow in the high teens, and that is likely to provide a floor to an otherwise weak and subdued retail trend.